Welcome back to Investing Talk Podcast.
Today, we're looking at POET.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. When we look at POET, you have to start with the numbers, which, to be honest, look absolutely terrifying to the casual observer.
Terrifying is genuinely the right word. I mean, if you just glance at the 2024 financials, they're screaming distress. We're talking about revenue for the whole year totaling just, what, $41,000?
Just over, yeah. And that's a brutal 91% decline from the year before.
91%. And the net loss has swelled to nearly $57 million. On paper, this just looks like a company in complete freefall. Why should anyone even look past that?
And, you've hit on the most critical question here. But what we're seeing isn't a random collapse. It's a very painful but deliberately executed strategic transition period. To understand POET, you absolutely have to understand this pivot.
Okay, the pivot. Tell us about that. What exactly did they ditch, and what are they running toward?
They made a conscious and I'd say aggressive decision to pull the plug on their old revenue stream. This was low-margin, non-recurring engineering, or NRE services.
NRE services. So what does that mean in simple terms?
Think of it like contract consulting work. It brings in these quick, small pockets of cash, but it doesn't scale. You're not building valuable IP, and the margins are razor thin. So they just hit the accelerator on R&D for actual products, knowing that NRE revenue would just collapse while they were building.
So they essentially took a wrecking ball to their old cash flow on purpose. They accepted all this short-term pain for the potential of a massive long-term gain.
Exactly. And that explains the shocking revenue numbers for 2024.
Okay, so what is this new focus that justifies such a drastic move?
The new focus, and this is where all their capital and engineering is going, is into high-margin product revenue. Specifically, their advanced optical interconnect solutions. They're laser-focused on their 1.6T receiver optical engines and related co-packaged optics.
Which are the key components for next-gen AI data centers, right?
That's the prize. These are the components needed to power the next generation of artificial intelligence.
The losses are massive, but it sounds like we might be past the worst of it. Are we seeing any actual evidence that this pivot is starting to work?
We are seeing the very first small flicker of an inflection point, and this is a really crucial detail. Their third quarter 2025 revenue came in at almost $300,000.
Okay, so up from basically nothing.
Right, specifically $298,434. Now, that's tiny in the grand scheme, but it's so significant because it signals that the shift to commercialization, to actually selling a product, is starting to take root after that long, painful R&D phase. The story shifted from, are they building it, to, is the product shipping?
And the Q3 numbers suggest, yes, it is, even on a small scale. Yes, that makes the past pain understandable then.
So let's pivot our focus to the future. Why now? What's the market opportunity they're chasing with this specific piece of tech?
Well, the opportunity is the massive structural tailwind of AI infrastructure. And the company's competitive advantage, their moat, so to speak, is their proprietary technology called the optical interposer platform.
The optical interposer.
That platform is what gets them in the door to this explosive growth in AI connectivity.
Right. We hear constantly about AI data center demand just growing exponentially. Can you explain why POET Tech is so important for that? What even is a 1.6T receiver optical engine?
Absolutely. So analysts are projecting that AI-driven data center demand is accelerating, growing somewhere between, say, 19 to 22% a year. To handle that, think massive training models. You need just unprecedented speed for data transmission. And that's where the current bottleneck is.
What is that bottleneck exactly? The current optical interconnects, the little devices that send data using light, are just too big. They draw too much power, and they're way too expensive to build at the massive scale AI requires.
And the T in 1.6T is terabits per second.
Terabits per second. It's the speed you need for this next wave of computing.
So how does the optical interposer solve that physical problem? Give us a simple analogy.
Okay. Think of the interposer as an extremely efficient, integrated highway system for light, replacing a bunch of separate winding country roads.
Okay.
Traditionally, you have separate components, lasers, sensors, all wired individually. The interposer acts as a base that lets all those components be integrated and placed much closer together. It just fundamentally shrinks the size, cuts the complexity, and drastically lowers power consumption.
That makes the advantage pretty clear, and it's not just them saying it, right? They have some important partnerships that kind of validate this whole thing.
Exactly. The validation is key. They're collaborating with heavy hitters like Semtech on those optical engines, which is huge for commercial credibility.
And they also worked with Sivers Semiconductors, right, on the light source problem.
That's the other crucial half of the equation. You need highly stable external light sources to hit those 1.6T speeds. Their partnership with Sivers tackles the whole problem end to end. These aren't just handshake deals. They prove that POET's solution addresses the core industry constraints, the size, power, and cost that are limiting how fast AI can scale up.
Okay, so they have the tech, they have the market validation, but revolutionary tech often struggles for funding, especially with those brutal losses on the balance sheet. This brings us to that landmark event from late 2025.
Right. This is maybe the single most important factor that de-risks the short-term thesis. The capital raise in October 2025. POET closed a landmark U.S. $75 million investment, their largest ever.
$75 million, that's a huge vote of confidence. But the really astonishing part is that it came from a single institutional investor. I mean, given the $41,000 in revenue for the year, what does that tell you?
It signals profound conviction. It tells you this investor isn't betting on the current P&L. They are betting on the IP, the tech moat, and the massive future revenue from the AI market. They did their homework and concluded the execution risk is worth the reward.
And it avoids massive shareholder dilution.
Completely.
So what does that money actually mean for them? What can they do with it?
It's transformative. First, it removes all near-term funding pressure. It gives them a long runway. Second, the capital is specifically for accelerating growth in AI connectivity. We're talking about ramping up R&D and critically, aggressively scaling up their manufacturing operations in Malaysia.
Why is the Malaysia scale-up so important?
That facility is the engine room for this whole pivot. To compete with the giants, they have to show they can manufacture at high volume and low cost. Scaling up in Malaysia, where costs are lower, directly addresses those bottlenecks we talked about. The $75 million just accelerates their ability to deliver a product at a competitive price.
And I think I remember reading the funds are also for potential M&A.
Yes. It's also for potential strategic acquisitions in the photonics module space. If they can buy existing capacity or specialized IP, it speeds up their time to market dramatically. They're essentially buying time and capability with that $75 million.
All right, so they're financed, they have validated tech, and the market is desperate for a solution. For the listener looking forward, what are the immediate catalysts we need to watch over the next 3 months?
The immediate future all centers on a February 13th, 2026. That is their scheduled Q4 2025 earnings release.
And that's the big one.
It's the critical event. It'll be the first real chance to see the impact of that $75 million raise and gauge the success of the scale-up in Malaysia.
So are we just looking for revenue numbers, or is there a specific metric investors should be watching?
I would say focus less on the absolute dollar amount of revenue and more on the product mix and the guidance. We need to see that new high-margin product revenue growing as a percentage of the total. That signals real traction. If the guidance suggests a clear path to accelerating that through 2026, that will be the catalyst.
And beyond earnings, what about institutional signals in December?
Yeah, institutional activity around mid-December is key. Around December 15th, we'll see the 13F filings. We're looking for new major institutions showing up, confirming that conviction is spreading. Then, late December, you've got the index and ETF rebalancing announcements. Getting into a major tech fund would be a big boost for liquidity.
Okay, now let's get to the exciting part. The unverified rumors, the speculative upside that, if true, would be transformative.
And we have to emphasize this is just market rumor and speculation, but it shows the size of the opportunity. The biggest chatter is about a potential strategic acquisition of a photonics module target, which, like we said, would just speed everything up.
And the really big one, the partnership rumor that could validate the whole thesis overnight.
Right. There are whispers of unconfirmed negotiations with a top-tier hyperscale cloud provider, a major North American AI data center consortium.
One of the giants.
A name you use every day. Securing a design win with a player like that would transition PO8 overnight from a promising R&D company to a major commercial supplier in the AI space.
And finally, there was some talk about their assets in Asia.
That's the potential IPO or spin-off of the Malaysia subsidiary. That facility is a crucial asset. If they were to spin that off, it could unlock a ton of value or bring in a massive strategic partner to help fund more scaling. The rumors just signal explosive potential.
Given all this, but also the short-term uncertainty, where is the stock trading now? What's the technical picture?
As of late November 2025, it's really consolidating. It's in a tight, nervous range, trading around $4.27 to 4.39.
Right around its 200-day moving average.
Exactly, which sits around 4.32. It's a classic battleground institutional confidence versus short-term retail fear. And in fact, the broader market sentiment indicators registered fear at 39, so a lot of uncertainty is priced in.
So you have this tension. Big money conviction, but market weakness. Does that present a tactical opportunity?
For investors who have done their homework and are betting on that Q4 validation or a big partnership announcement, yes, the near-term weakness presents a tactical buying opportunity. You have to watch two key zones. Major support is down between 350 and 390. That has to hold.
And on the upside, what resistance do they need to clear?
They need to convincingly get through that 5 to 550 level. If they can sustain trading above that, the next psychological target moves up toward that $6.25 to $7 range. But getting there requires more than whispers. It requires confirmed product delivery and positive guidance.
Delivery. That brings us to the risks. This is a high-risk, high-reward play. What are the three biggest things that could derail this, even with the cash cushion?
Right. The risks here aren't about the tech failing, they're about the execution failing. Number one is commercialization execution risk. They have to move from prototypes to mass production scale without costly delays or, most critically, yield issues.
What exactly do you mean by yield issues?
Yield is the percentage of manufactured products that are perfect. In complex optics, if your yield drops, you're making too much wasted product. It destroys your margins and your timeline. Failure to get high yield pushes profitability out to 2027 or later, which deflates the whole case.
And because they're so focused on the AI data center market, that concentration itself is a risk, isn't it?
Absolutely. Customer concentration. If they land one or two of those hyperscale providers, their revenue becomes hugely dependent on them. Losing one design win to a competitor could instantly pressure the valuation.
And finally, they're not alone. They're swimming with whales here.
That's the classic competitive threat. Entrenched players like Broadcom or Marvell have vast resources, existing relationships. They're giants. While POIT has an advantage with the interposer, if a giant decides to commit its full weight to a similar solution, that's an existential threat. They have to be fast and they have to be flawless.
So, if we step back and summarize the whole narrative, PO is a high-conviction bet on the structural future of AI, backed by a massive capital injection.
That is the final thesis. It's a long-term investment, for growth-oriented investors who can tolerate high volatility over a 12 to 36-month horizon. You are buying the potential outcome of a massive market shift to optical interconnects in AI, and the bullish case depends entirely on them delivering high-margin revenue and hitting profitability by 2026 or 2027. What's fascinating here is that the future of POET rests entirely on turning that massive $75 million vote of confidence into tangible product revenue. Execution is the only metric that matters now.